people running into a fight to quality, whether that is in treasuries, gold, or crypto, depending on how you think about it. And I believe crypto will play that type of role as a flight to quality.
That's Larry Fink, the CEO of BlackRock, the trillion-dollar asset manager. Yeah, and he's 100% wrong. What just happened to Bitcoin has nothing to do with a flight to safety, global uncertainty, or some return to the bull run. Nothing. But the truth you haven't heard is even more interesting than this fiction. You see, it's the story of a false news event published by one of the largest media outlets in crypto, triggering a bunch of one-way bets by greedy traders who were then forced to buy a Bitcoin on the open market when they realized the news was fake, causing the price to skyrocket. And it could very well happen again. Now listen up as JJ, Ben Lilly, and Ray break down the events of the past few days, how it could push Bitcoin way past 30K, and whether it's time to ape in. Enjoy.
Gamma, gamma, gamma. So on last week's episode, we noted the potential for BTC price to accelerate above 28K. And that was due to positioning in the options market, which was heavily short out of the money calls, also paired with excessive short interest that had been piling in since August. And that powder keg finally found a spark in the unlikely form of Cointelegraph's misreported tweet that the SEC had approved the spot ETF, which turned out not to be true later on, but the damage is already done. We saw that massive squeeze, price accelerated from below 28,000 to above 30,000 in minutes as the call sellers scrambled to hedge their positions, and they were forced to cover near the highs and in a liquid market. So we saw ask being removed off the order book, which forced them to buy higher and higher. And that's why price just moved in the fashion it did. So this paired with those increased volumes of people being forced to buy, it was pretty interesting. They were similar to what we saw in August when price crashed below 28,000 to 24,000 in just a matter of minutes due to the excessive hedging that was going on. So as a result of all that, BTC is now back above its 200-day for the first time since August, and it could be nearing a major breakout and reversal here on its monthly chart. That would be reliant on it reclaiming 30,000 before the end of the month, and that would kind of form a pattern that we last saw in mid-2020 on the monthly chart, which is extremely bullish, but obviously a lot of things have to play themselves out over the next few weeks. For me, a monthly close over 28,500 would do wonders to secure the momentum and have it make a run into the end of October, early November. I think we could possibly see a rally up to the 36,000 to 40,000 region. So that's kind of what I'm keeping my eye on now. If it were to fall back below 27,700 per se, that's where I think we could kind of see the momentum fading, and then perhaps the sub 24,000 region comes back into play into the end of the year.
So JJ, let me rewind a little bit of this analysis because there's a lot really packed in there. You started off saying gamma, gamma, gamma. For those who are not as familiar with the term gamma and aren't really familiar with trading options, can you break it down a little bit more of a layman's evaluation of what just happened? Because I know we talked offline about what the dealers had to do to cover, and maybe the fact that they were using something what you can call a naked call option. So just break that down for us.
Yeah, so what they were doing, they were selling call options out of the money. This is what we discussed last week. So say they were selling October 28,000 calls, and they were short those calls, which means if the calls expired worthless, they get to keep all of that premium. It's basically a short position on a derivative. So as price moved up, they had to hedge that position, because as Bitcoin moves up, say it moves up $1,000 and you have your short one call contract at 28,000. Now you're 1,000 plus implied volatility and whatnot into the downside. So as it keeps going up, your losses accelerate. So in order to hedge that, they have to buy the actual Bitcoin back to cover their losses. So that's what we saw, is everybody trying to hedge in mass. And it was like yelling fire in a crowded building, and everybody's aiming for the same exit. They couldn't get in fast enough, and it basically caused price to accelerate.
And when you say buy in mass, they're not able to do over-the-counter transactions at this point. They're having to go directly to the market, which is going to have a direct impact on price. Is that right?
Yep. And that's so we saw the market was obviously aware of this, and they pulled a lot of the ask liquidity, which forces people to buy higher, because all of a sudden the person you thought was going to sell to you at 29,000 is no longer there. They're waiting to sell it to you for higher because they know you have to buy. So it's kind of that game theory of markets, is when people know somebody's vulnerable, they kind of press on that max pain point. I think that's what we saw.
Yeah. So even if you're not trading Bitcoin on options, it's really helpful to understand these dynamics, because they can have very strong, powerful moves they can create, as you said, sort of the powder keg and have that ignition to actually see that price movement. Oh, did we lose you? Oh, producers, help us out here. Seems like we got a little bit of audio off.
Hello?
Oh, I think we're back now. So my point, yeah, the point I was making was that when you have this sort of, even if you're not trading options, you really need to be aware of the mechanics of how this is going to operate and have an impact on the market.
Yeah, it's the game behind the game. So so much of the day-to-day price action is dictated on what goes on in options. We just don't necessarily see it show up as you do in regular price action. You kind of have to be aware of what you're looking at there.
Okay. Ben, I want to bring you in here. You know, we just had a breakdown of what happened from an options perspective. I know you like to look at the market sometimes more from a macro point of view. What was your take on the recent price action and maybe some of the targets that JJ's looking at?
Yeah, when it comes to what transpired after the kind of false alarm news event, the market did really show its hand. I mean, JJ kind of hit on it a good bit, and he really explained kind of why price moved at the speed and velocity that it ended up moving. A second part that kind of unfolded that maybe went a little bit less unnoticed was the attention that Bitcoin garnered in the market. Its dominance started to rise, and that indication in the market, which I think the dominance level is over 52%. It's been up like 4% essentially over the last month. Ballparking numbers, so don't hold me to it in terms of exact details there, but it's going up. And a lot of the other dominance in the market has actually been flowing into USDT. And so, if anything, the true kind of Bitcoin milkshake moment that we mentioned weeks ago hasn't really unfolded yet, but the market is really just kind of tipping its cap to that it getting ready to unfold. Even the ETH BTC chart is displaying that as well. It's lost support that it's been holding since looks like October 2022. It's fallen below it, and really that next support is going to be somewhere around 0.05 and change. So this tends to happen. Last cycle it happened, it looked like about 140 days before the halving. We're approaching that right now. I think ballparking it, we're right around 190 days or so to the next halving. So it's playing out in a similar fashion. Same thing with the dominance, and it's almost like continue going on. Things are unfolding as they have. History is rhyming. Time is flat circle.
Time is flat circle. Okay, I like that. Ray, I want to bring you up here. Anything else you'd like to add from a market assessment perspective to what you just heard from Ben and JJ?
For Bitcoin, no. I'm the type of guy that doesn't want to look at a Bitcoin chart every single day, and I think a lot of investors are the same. They probably don't have the time or opportunity, whether they would like to or not, to be looking at a daily chart or a weekly chart every single day. So beyond what Ben and JJ have said, price targets still remain the same. Upside potential around a 38.5K range, and downside, if price loses current range and falls below 23K, then maybe that's a place to start looking for longs under 23K. But end of year projections remain the same. So everything's moving along as expected. Only thing that I like personally is I see a bull flag on the weekly, and the price action is following the structure of that bull flag. So the cointelegraph fake news almost caused the price to spike through the top of the descending kind of trend line of that bull flag. But beyond that, it's still in play. So terminus of that structure would be around January 2024. So that's really the only thing I have my eye on, whether or not that structure is invalidated or if it continues to hold going into the end of this year. So that's my kind of main alpha play right now on the charts that I'm looking at.
Okay. All right, JJ, I'm going to bring it back to you to wrap up this current state assessment of Bitcoin. Break down again, just summarize. What do you think a investor versus a trader should be looking at right now on where the market's going?
I think in terms of investor, we're still in kind of a complicated macro environment, right? Like Dixie's high, we have all of these geopolitical fears and whatnot, and it's unclear whether Bitcoin will benefit from that yet or not. Um, from an investor standpoint, like the things I would look at would be the 200-day moving average. So obviously Bitcoin's above that now. If it could get a monthly close above there, the bull case for it becomes really compelling, especially if DXY were to start sliding here into the month's end to the end of the year. But you're really looking at longer time frames, and as an investor, you're probably holding on for say a year plus. And I think if you're holding on for a year plus, if you're buying Bitcoin now, you'll probably be rewarded over that time. But in shorter time frames, the volatility will wash a lot of people out. Could possibly move up to 40K and then back down to 20. And if you're trying to trade it, you really have to be keeping an eye on it at all times, which, as Ray mentioned, isn't necessarily the best thing for your mental health.
And we do support people having very good, very healthy mental health. Okay, all right. Well, that's going to wrap up the market update. And I think it's good for listeners, longtime visitors, any of our newer listeners to be contemplating what's going on in the market. But as Ray pointed out, you don't necessarily want to be looking at all the time. And in fact, what we're going to be transitioning to now is, again, asking the types of questions that would give us an idea when has the bottom actually reached the market, and how can we be thinking about this more from a long-term investor perspective. And I'm going to start that off. I'm going to kick it over to you, Ben. If you found this content informative, JJ is putting together a deep dive trading for crypto options that goes into even more detail on what you just heard. So like and subscribe to the channel so you can watch it as soon as it comes out. And thanks for listening, sharing, and commenting on the latest video.